This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
This is the Victoria Real Estate Podcast. Hello and welcome to the Victoria Real Estate Podcast, where we discuss everything Victoria Real Estate. I'm Adrian Maclaren. I'm joined by my co-host
Vincent Baart,
and we are realtors at the CityNest Team at Remax Camosun in Greater Victoria. Like always on our monthly update episodes, we're also joined by
David Steinberg.
Thanks for coming, David. David's with Olympic Mortgage, so he's our mortgage expert on our market updates. Just before we get into things, I want to give a shout out to our sponsor of the podcast, Canine Car Care. Canine Car Care came to the office, cleaned my car while we recorded the podcast. They did an awesome job, and I was really impressed by the results. They offer remote car detailing. They offer 100% satisfaction guaranteed, and they state that a clean car equals instant confidence.
It helps.
Canine Car Care.
Yeah, caninecarcare.com. Guys, what's new? What's going on? Tell me. It's 2026.
Yeah, here we go. Okay, we need some good stories. I bought a sailboat for $1 on the weekend.
No, you didn't.
Oh, wow.
Yeah,
How is that even possible?
persistence, negotiation, and patience. I found this guy like 3 months ago on Marketplace. He had a boat that I really wanted.
Needs a lot of work, probably.
No, it's in pretty good shape. And
Okay.
I said to him, look, here's the deal. I need to sell my boat. You need to sell your boat. Why don't you just give me yours for $1 and I'll give mine away for $1? And he said, that's a really dumb idea. I said, well, think about it. So anyways, a few months go by, and the monthly cost of taking care of a boat ends up being so much that the minute you throw your keys at someone else, it becomes their problem. And so, true to my word, I advertised my boat for sale for $1, and I sold it in about 90 seconds.
Yeah.
And I slashed the price. And so now there's another awesome family that gets to have a boat adventure this summer. And now my family gets to have a boat adventure this summer as well. So
Now, why does it cost so much to have a boat? Is it the mooring cost?
yeah,
or?
I mean, mortgage alone, but I mean, just taking care of it, insurance. Every time there's a storm, can you imagine every time it's dark and stormy and you wake up and you're like, oh, it's really windy out. Instead of just rolling over and going back to bed, you say, oh, I wonder how my boat's doing. Is it smashed up on the rocks somewhere? So yeah, there's definitely an emotional burden and a financial burden that a lot of people are saying, hey, I'm done.
Yeah. Wait, so and what was the main upgrade here? What is different about this new boat that you're so
Bigger,
happy
more
about?
feet.
It's actually shorter, but it has a larger interior volume, so you can go camping on it, and it's got cushions.
How many bed bath are we talking here?
Yeah, that's right. Yeah, it does actually have a porta potty, so that is an upgrade. But it's the same model. When I was 18, I lived on a sailboat for a little while, and it's the same model of boat that I lived on. So I have this attachment to this type of boat. It's called a Tanzer for any boat nerds out there. Anyways, great little boat, and I'm really excited to have it.
Cool. Well, congrats on the boat purchase.
Yeah, thanks.
Yeah. Carrying
Yeah.
costs. Did David finance that for you? Or?
That's right. Yeah,
$1?
That's right. He helped.
David, what about you? I see. Well, actually, as soon as you walked in today, we saw the Ray-Ban Meta glasses.
Yeah.
So
And I guess I have a little bit of a funny story with regards to the
Please,
glasses.
please. Yeah.
So I guess, 2026, it's kind of like partially the new me, right? Like
Yeah.
I'm getting maybe a little bit better with tech.
Yeah,
Like when I
okay.
put my glasses on now, I'm like, okay, I can type while I'm talking to somebody, and I can listen to music, and I can take phone calls. So when I put them on, I'm like in work mode.
Yeah.
Like when I had to take them off, out of work mode, relax. When I put them on, I'm like in work mode. And I woke up this morning and told my girlfriend that I was doing the podcast.
Yep.
And she says, okay, you know what? Let me give you a haircut, and let's shave your beard. And I was just thinking to myself, no, because I want people to know how old I am, so that they can more trust what I'm
You
saying.
look so wise. The pocket square.
Yeah,
man.
exactly.
Wait, so that's what I have to do for people not to think that I'm like 25 years old?
Did you ever see my photos when I was a new realtor? I was
No.
like 25, 26.
Oh, maybe.
I grew the biggest, nastiest beard I could.
Yes, I do remember that.
because
Yeah,
I wanted
yeah.
people to think, oh, beard, I look respectable. So yeah, you look
So
very respectable.
I'm going for like, looking fresh with my glasses and
Love it.
my shirt and my shoes.
Oh yeah, fresh cooks. Yeah, if you're listening.
Kind of thing. But leave the gray beard, Leave the balding head.
Yeah.
You know, so people can realize they're not just talking to,
Yeah.
you know, like
hip and
somebody
with
new
it,
kind of thing.
but experience.
You still got it.
Yeah.
There we go.
Gotcha. Okay. I guess for me, I mean, honestly, I was just gonna talk about real estate. You guys are like, what do you guys? Boats and glasses, and I don't know, but what I noticed in the real estate, like, I've just been really busy for January, but we sold 2.
Yeah, and
units.
one's got conditions.
Yeah, one's got
Congrats.
But that's the 6-plex townhouse development on Emerson Street. But we just relaunched and everything's looking really good. But yeah, we've sold a couple of those now, which is really awesome, and we're getting decent interest.
Lots of showing.
What a
Yeah.
great location.
Oh, that's the best thing about it. Yeah. Is the location.
I'm
is
actually kind of
amazing.
confused why those haven't sold yet.
It's pre-sale.
Because-
It's pre-sale.
It's
That's it.
pre-sale.
Yeah.
Like the Victoria market doesn't like unfinished product. Now that it's finished, we have the new photos in there. We're getting the last 4 days in a row we've had showings.
Well, to get a townhouse in town
Yeah.
for $700 or $750,
Yeah.
that's like right by the hospital. It's
And
to me, it's an incredible deal.
and brand new product too, right?
Yeah, to
Heated
me, it's an
bathroom
incredible
floors,
deal.
Air conditioning, the whole works. Quiet street. Anyway, if you're interested, 1789 Emerson, reach out to me or Vince, and we can set up a showing for you. The other 2 things I noticed is I feel like the end of the year last year was really, really slow for real estate. Like November, December, dead quiet, and then I think that what that led to is all those houses that were sitting in the market for about 60, 85, 90 days in that time. In the beginning of January, there was
got
this like,
sold?
there was this huge uptick of like relists that were like getting snatched up. But I had a couple buyers that were like savvy enough to like kind of pounce at that time. And we got a great deal on a single family dwelling on the West Shore, 50 to 60K under ask.
Wow.
And then a townhouse deal where
And under BC assessed or over BC assessed?
under.
Under BC
Well,
assessed.
and what's funny is we got the accepted offer. BC assessment comes out and they raised the price another 50. So they got it.
Oh,
like,
wow.
I think they got
You guys got a
100K
great deal.
under
Wow.
BC assessment. Yeah.
That's amazing.
And then for the townhouse deal, I had helped buyers get into the same townhouse development a couple years ago, and prices are exactly the same. So it's 2 years of flat market, and we got basically the exact same product for the same price. Actually, we were able to negotiate a 15K off from the developer, which was awesome. But I feel like right now, before anything kind of happens, like there's some good for buyers at least. There's some good product out there.
It's a good
So,
deal for
That's
buyers
awesome.
right now.
Yeah.
Like
Yeah.
it's a yeah.
Some good
Yeah.
deals out there, and we'll get there. But before we
Yeah.
get there, I think we need to have a little bit of a warning.
Warning. What's the warning, Vince?
Well, normally we have warnings, not financial advice, etc. But if you're driving along, you're listening to this in your car, and you're saying, "Do I want to listen to these guys talk about what we talk about?" This episode has a ton of data, so it contains a ton of market information and insights on the broader economy. David brought his stack of Globe and Mail newspapers, so it's going to be a good time. So if you're looking for like staging tips or fun real estate cooking recipes for dog treats, this is not the episode for you. Scroll on. We won't be offended. This is for the data nerds that really want to talk about what's going on in the economy right now.
Yeah. And the main purpose of today is we're going to try to do a little bit of a recap of 2025.
That's right.
For real estate, and then we're going to kind of give a little snapshot of the start of the year this year, and then maybe some predictions as well. So yeah. Before we get started though, I was kind of just reading some articles, looking at stuff, and one thing that obviously pops up all the time is affordability in Victoria. Right, we're the third least affordable market in Canada, right behind Toronto and Vancouver. Basically what I wanted to snapshot is what does it take to get into each product. And actually, I'm so glad to have David here because he is going to be double checking my math as we
can
go
do that.
through. Yeah.
Bring up my mortgage calculator. I'm ready to go.
Please. So we'll start with single family. I put the average sale price right now for single family in Greater Victoria at 1.265.
That sounds about right.
Sounds about right. Now, anything over around that over $1 million, I believe it is, needs 20% down.
No.
No, did that get raised? What is it?
It's anything above 1.5 million needs 20% down.
Okay. Actually, I mean,
Yeah.
technically, this is actually going to be maybe incorrect because I have 20% down on this, meaning you need 250,000.
But that's the most common down payment,
It is,
right?
yeah.
Yeah,
For
20% is the most common. So
for a single family,
to qualify for this with, let's say, 10% down.
Yeah.
The folks are you asking like how much folks would have to be making?
Yes, yeah. So basically, to buy a single family in Victoria, 20% down, you need 250K basically in a down payment for that 20%. Now, required household income, that's like you and your partner, whoever else you decide to get in on
We
that.
changed the contracts now. We have thruples, right? We
Yeah,
have
thruples,
three buyers on every.
quadruples.
Yeah, it's possible.
But the range I have is 185 to 205.
For income needed?
Yeah.
Okay, just a sec here. So at 20% down, see, this is, so what did you say, sorry?
185 to 205.
Okay, I'm going to punch in 185 first. And at a stress test rate of 6%, so
Yeah.
assuming they get a really, really, really good rate right now,
That would be
30-year
really good.
term, 20%, 1.265 million with 20% down, throwing in property tax and heat. 185. It looks to be about that. That's
Okay,
right.
all right.
That puts our GDS right at around 42.
Okay.
Okay.
So you can't
So
have any
yes.
other debt shenanigans. You can,
You can have some other debts because we can stretch. I'm getting technical now, but we can actually stretch the debt servicing ratio to 50%.
Okay.
If the deal makes sense to the lender.
Yeah.
Oh, wow.
And if we have 20% down.
Now, so basically what I wanted for this conversation, though, there's all these numbers and everything. What I wanted to kind of get at is who's buying a single family home in Victoria, and it's going to be two professionals, making around 80 to over $100,000 a year as a couple, having that around 185 plus range for that 20% down. Now, the other demographic getting into single family homes is people who have equity, right?
Yep.
Somebody who has $600,000 in equity in their townhouse or their condo or whatever they have, and they're able to put that larger down payment down, bringing that mortgage payment down to qualify for the home. So that would be the two parties that I'm seeing buying single family homes in Victoria, right?
Yeah.
Now dropping down to townhouses, I have a average price of $828,522. Or just as an example, minimum down payment I have $58,000 on that as the minimum. Now required income on that I have $145 to $160.
Let me check the numbers here.
Okay, all right.
So
I tried to warn the
minimum down
listeners.
payment is
You didn't trust me. You didn't trust me after the first. I got the first one right. Come on.
Okay, so I've got here minimum down payment at 58 grand
Yeah.
basically.
Yeah.
At 6% stress test
Yep.
because we still have to do that, and we can still do 30 years if it's a first time home buyer.
Okay.
If it's not a first time home buyer, we can't do 30 years.
Right.
And so we're saying less than 20% down.
Yeah.
So let me just adjust this. And what did you say the income was required?
145 to 160.
Okay, just a sec here. Sorry, almost there. 145 to 160.
Yep.
So at 145, my debt servicing ratio comes out at 42%, but that doesn't work because it has to be under 39 if it's 10% down. So 40. So we have to get that 42% down to under 39%. So what was your upper threshold?
160.
Yeah. So that's going to
good
get us
about
there,
that.
I think. So at 160,
Yep.
this debt servicing ratio with a $3,500 property tax payment becomes 38.587.
Okay.
So right there.
Yeah. Okay, that makes sense.
Yeah.
Man. Okay.
And so the big difference here is you're putting that minimum down payment down, right? You're putting the 5% on the first 500 and the 10% on the remaining 328. And so that's why income's high on that, right? Like if you're able to put 20% down on the same then it's
going to be a lot lower.
Yeah,
in
your income needed is going to drop down a lot. But
but what's the strata fee on the townhouse?
well, that don't worry about that.
Okay, so it's going to be more. It's going to be more than 160.
Yeah.
Sorry, it's going to be. Yeah, it's going to be around. It's going to be around 165. Let's say I'm splitting here.
Yeah, splitting hairs. Yeah. But yeah, so the point I'm trying to make here is who's getting into a townhouse in Victoria probably are kind of the same demographic, right?
Yeah.
Like unless you have that 20% down, and then maybe your income's coming down, right? But yeah, kind of that same demographic. There obviously are cheaper townhomes out in Langford. I mean, you can get some townhomes in the 500 ranges.
Well, there's some great townhomes over by Royal Jubilee right now for about $750,000.
That's true. $100,000 off right there.
So
And then
just on that, actually, though,
yeah,
like the amount of income required at 20% down is significantly less.
yeah, give it to me.
Well, at just under 50% debt servicing ratio, which is above the guidelines.
Yeah.
So if it's a strong deal, if the bank likes who's applying, then I can get it the income as low as 110 grand.
Okay.
So that's 50 grand less.
And that would be two people making, $60,000.
Yeah, or one
a year,
person making 110 or 120.
yeah, or a single person. So you're now looking at like a more affordable entry point into the real estate market. And then our last demographic, condos, average price $537,800, total minimum down payment, only $28,000. At that price range, and then the price range I have there, we don't need to get into the details, but I have 95 to 110, and that's at that total minimum down payment. But like David said, if you're putting 20% down, we saw, what was it, like a $40K drop there. So our
significantly
total,
less.
Yeah, we're probably looking at
required.
like around a $70,000 to $80,000
Yeah.
income going on that one. And then once you build that equity, that's how a lot of people get into single family, right?
Yeah.
They have $100,000. $200,000 in equity in a different property, and they're able to put that larger down payment down on that single family home to kind of get into that higher price point. Anyway,
But is this average? So
this is average. Yeah,
to me, when I am looking at 2021 census data in 2020, so a couple years ago, the median household income, after tax, was $75,000. So yeah, I think the average family could afford the average condo.
Oh, definitely. Yeah,
Ish.
Yeah.
Yeah, it's a squeeze.
Yep. And then, kind of like what I was saying, dual income professional households are probably the main buyer group for single family, or people transferring home ownerships, right? Moving to house or townhouse up to home. First time home buyers are often needing either, strong incomes, minimal debt, or like we said, starting with a condo or a townhouse and then increasing to increase the down payments, basically, as equity builds. That was my segment. I just wanted to kind of go into, because a lot of people I've been talking to are like, I've talked to a lot of people who maybe haven't talked to a mortgage broker yet, and then they do. Like my buyer who bought in the West Shore recently, they bought the house for just over $1 million. He already had a condo, and now he just like saw a house on MLS, and he was like, oh, I kind of want to go take a look at it. We looked at it, and he's like, I kind of want to buy a house. I don't know what I qualify for. Talked to a mortgage broker. Oh, you qualify $1,050,000, and that's without selling his condo. Yeah.
So he already
had I think he had $100-something thousand down payment ready to go. So he actually did less than 20% down, but he had no idea. Like it wasn't even his radar that he could qualify for $1 million home.
So the lesson is
talk to David. Talk to David. That is,
Sorry, guys. The plug has to come at some point in time.
I didn't know that's where this was going, but of course,
you led it right there.
I did.
You did.
But it's a short call too. Like you just kind of say
10-15 minutes.
Just like we just did on this example, these 3 different scenarios. It's just like, hey, this is our rough income. What can we roughly shoot for? And then you narrow it down once you have paperwork. But it doesn't have to be a complicated form process at the beginning. It's just a quick 10-minute call. To get some comfort.
And then after talking to David, obviously you want to talk to either me or Vince, and then we can negotiate that extra $50,000 off the price, right?
You're such a shark. Yeah.
Get them all.
Yeah. So David, we want to get into mortgage economics.
Yeah.
Do you want me to list?
Do you want to give me my first one?
Yes, let's do it. Okay. What the economy is really doing.
Okay.
I have notes here: Amazon layoffs, trade disputes, AI, and then something about Tiff Macklem's speech.
Yeah. So
please.
Tiff Macklem made a speech yesterday.
And who is Tiff Macklem?
Tiff Macklem is the governor of the Bank of Canada, and basically kind of like the figurehead or top guy that controls the overnight banking rate,
right.
the interest rates. And his speech yesterday was basically saying he's just the messenger as to what's happening in our economy. He is just the messenger. He doesn't actually control what's happening in our economy. He can't control what's happening in the economy with interest rates.
So what are we paying the guy for?
Yeah, exactly. What are we paying the guy for? He's our accountant. He's sort of like
Canada's
he's
accountant.
like Canada's accountant.
Wow. He must make some good money.
He looks at all the numbers coming into him. GDP, employment numbers, supply and demand, inflation, he looks at all those figures, and then he sort of decides if he wants to try to use interest rates in order to spur our economy on, or whether not to. Last week he decided not to raise or lower the rates because he's being careful with it.
Yep.
He's being careful with it right now because there's no necessarily super clear economic sign that will make him want to do anything.
Yeah.
Now, what I think is going to happen, so in our economy right now, we can see it happening. this plays into also speculative assets versus non-speculative assets.
Okay.
Like we're seeing in our economy now that maybe because, people have more access to technology and more access to information, assets are becoming more some assets are becoming more speculative.
Right.
GameStop,
Yep.
Bitcoin. Oh, I can buy Bitcoin? Oh, I can go on an exchange and buy Bitcoin? Oh, well, it must be legitimate. Let's go buy it.
Yeah.
So
I did that the other day. Yeah, you just put your credit card in. It's really easy.
you bought Bitcoin.
Just a little bit. Just a little bit.
How many points?
Oh, yeah. It was like, I think I threw like $50 at it.
Yeah,
Just
yeah.
like,
Right.
I'll
But
play
what-
this.
What Tiff is saying here is that we have to really be aware that he can't control the economy. And his foreshadowing is that we're in trouble. The economy could be in trouble because we're creating all of these things. All this technology that we're creating is ultimately to try to make things more efficient, but it's going to also take jobs away from people.
Yep.
And so when the unemployment rate starts to go up, there's less people that have money to spend on things that make the economy go.
Right.
Our economy is very dependent on credit, but it's also very dependent on consumables.
Mm-hmm.
So our economy is very dependent on people going out and buying things.
Right.
Now, if a bunch of people last night just lost half of or if a bunch of people over the last 3 weeks have lost over half of their Bitcoin, are they going to be more willing to go out there and buy a new toy or buy this or buy that?
No, probably
No.
not. Yeah.
Consumer sentiment's a little
Consumer
scared.
sentiment
Yeah.
is going to get scared. And yes, I think that we're going to see the bricks start to fall in our, I'm not saying it's going to be a major depression or anything like that.
Right.
But we also saw a headline that was kind of buried in all the other headlines is that Amazon just laid off people. Amazon is a huge, gigantic tech company. And Amazon laid off people. So Amazon's share lost 6%, which I think is a lot of money. A lot of market cap, market cap came off. A lot of people lost 6% of their Amazon stock. But more importantly, there's a lot of people that got laid off. And that tech company specifically is showing signs that we need less people, but we still want the same revenue.
Right.
And it doesn't happen that way. So I think we're in a tech bubble. And I don't know when it's going to explode. I don't know when the bubble is going to pop.
Yeah.
And it might just be the bubble popping, but then sort of things releasing slowly.
Well, what's kind of funny, David, is I actually was having a conversation with somebody this morning who I guess has been doing a lot of or consuming a lot of content regarding AI and technology companies, et cetera, and how everyone's investing in AI. And his opinion was actually the exact opposite of yours, where you're saying there's this bubble, and he's saying tech is indestructible. He was saying because of AI and like its exponential growth in terms of all these tech companies now having AI to kind of boost them even further, it's like, yeah. Anyway, but it's interesting.
Let's look at the history.
Yeah.
Let's look at Enron in 2001.
Yeah.
Enron was just a huge, gigantic tech company.
Yeah.
With
Let's
a bit
look
of
at
they had some fraud thrown in too.
Yeah. Let's look at BlackBerry.
Yeah.
There's
Rip.
Well, but that's the thing is that these tech stocks, there's no underlying asset.
Yeah. I know. I get what you're saying. Yeah. It's all speculative.
Like it's very, very speculative.
Yep.
And because of that, people have been inflating their stock prices by probably too much, in my opinion. So I think there will be some sort of, I think Tiff is trying to tell us that there's an economic storm coming, and he might not be able to help prevent a recession.
Right.
Are people spending more money on toothpaste or all the consumables versus 6 months ago or a year ago? Are we spending more money? Probably not. Are we?
I'm trying to think, like when we say consumables, for some people, they might think like, toothpaste and hamburgers. But to me, like those are typically recession-proof things.
Yeah.
Yeah.
So like consumption
But
of toothpaste is.
But I'm just saying that all these companies are maybe being inflated past what their stock should be.
Right.
Because we're not actually spending that much more money
Yeah.
on the things that we're buying. So I think, I think that the market right now is speculative in that a lot of the stock prices going up. There's not a huge amount of rhyme or reason for it.
So then I know you have your last point here, kind of focusing on, I guess, speculative assets, which we've been talking about, versus non-speculative assets.
Yeah.
So you think there's going to be a shift, or?
Yeah, I think as people kind of clue in to what's happening, people are going to move their assets out of speculative assets. Okay, so I'm going to start to sell Bitcoin or my Doge or this or that.
Yeah.
Or I'm going to sell some silver because it just earned 300%, or I'm going to sell my gold and put it into a fixed income bond
or real estate.
Well, there you go.
Hello.
Right? Exactly. I mean, this is what we've all built our careers on, kind of thing.
Yeah.
The fact that real estate is the one asset that doesn't really bounce like crazy when these massive stock market crashes do happen.
Right. Yeah,
because we're not all going to sell our home. Oh no, the stock market lost when I remember in 2008. I was there. I mean, you guys were a bit younger.
Yeah.
But in 2008, I was working at the bank, and the the mortgage crisis happened. Lehman Brothers failed in the States. Yeah. Insurance companies were failing. Banks were failing because their underwriting standards were terrible. And the TSX loss, it went from the height of 15,000 to about 7,500 in one day.
Yeah,
there was half of the market was wiped out.
Wow.
Did everybody in the bank that I was working at say, "Oh, I'm going to go home and sell my house now"? No.
Yeah, no.
Nobody did that. So, yeah, I think that real estate and fixed income is non-speculative assets. And I say fixed income assets because fixed income is a contract.
Yep.
Debt is a contract. Owning a stock or expecting a company to pay dividends isn't on contract.
Mm-hmm. Yeah. Nothing's guaranteed on there. Yeah, I get what you're saying. Wow, I feel depressed now.
Sorry.
Yeah, do you have any good?
No, I don't think it's anything to be depressed about.
Oh,
I just
okay.
think it's good for us to be aware.
So what does this mean, David? Like, what are you trying to get across to our listeners with all of this information? What is the take-home message here?
Well, the take-home message is, first of all, like, go towards the assets that people tend to go towards when things are speculative. So, the stock market's at its high right now. Maybe it's time to take some of that money out and buy your property, or buy your primary residence, or buy another rental property.
Yeah.
And even if property does go down with said recession, it's not like all of us are going to en masse sell our properties and create even more of a real estate crisis. We all need somewhere to live.
Yeah.
So my sort of lesson, I guess, is just, batten down the hatches.
Yeah. Well, and to actually touch on speculative assets, I think that real estate can also be speculative.
Definitely.
Yeah.
For an investor.
But I think what I would want to point on that is you got to be smart about what you're buying.
Right.
Like, say a condo developer, there's a ski hill that they're building where it only snows every 4 years, and they're putting up condos there, and you're like, oh man, they're great deals on these condos. Let's buy one of those. That is a lot more speculative than say a single family home in the core of Victoria.
Like, how many people do I know that called me that were stuck with the Mount Washington condo forever?
Yes.
Right.
Yeah. Well, that's an example.
I love myself. I mean, I love Mount Washington, but it's the nature of the asset.
Yeah.
It's not where you're living.
Yeah.
So it's maybe the first one that you're going to take a loss on.
Yeah.
But
That makes sense.
Somebody's not going to necessarily buy their house and live in it and then sell it at a loss. They're going to keep paying their mortgage, and they're going to move on with life.
Yeah. And honestly, we're probably going to get into that in terms of Victoria's housing market update and the resilience of Victoria through, all of this stuff that we've been talking about. And we'll touch on that a bit more.
Well, there's a lot of things to be happy about. This next section is not one of them. So we're looking at how's BC doing as a whole. So we'll get into the Victoria stats, but I think it's really important to realize, Victoria does not operate in a vacuum. We are related to a certain mainland, much larger population. And what's going on over there? What has happened? So, the headline here is 2025 was considered the worst year for BC real estate in living memory.
I think it was this century. which is such a
I mean, yeah, okay.
Yeah, but how
2000s.
bad was it actually?
This millennium.
Yeah,
Yeah.
yeah.
So like that headline to me sounds like, oh my gosh, it was the worst year in real estate.
Yeah.
But how bad was it really, Vince?
Well,
Tell us. Tell us how
so
bad
here
it
we go.
was.
So there were historic lows in sales volume. So that was something that's really interesting. The actual number of annual home sales was the lowest in more than 25 years, falling below levels even seen during the 08 financial crisis.
Just so for the listener, this is sales number. So this isn't
Yes.
prices.
So people are battening down the hatches.
Yes,
Yeah.
exactly.
They're just
And,
not
and this
selling.
is getting back to our
Yeah.
point, what we were talking about. This isn't prices have tanked. This is the number of homes,
Right.
number of condos, number of townhouses sold in BC throughout the year
Which
2025.
the only people that are really worried about that number, that
Hey,
specific
we're
number.
sitting right here, David.
Well, sorry,
You're going to
guys.
say it. The realtors. Yeah, it's
Sorry,
true.
guys. Me too.
Yeah.
I mean, I'm dependent on it
Yeah.
also.
No, it's true.
Yeah.
And so that's a really interesting point. We talk about the lowest sales. Well, it's definitely not the lowest prices in 25 years. And although sales in the region were about 23,000. Okay, what does that mean? It's down about 10% from 2024 and nearly 25% below the 10-year annual average. So if you're down 25%, to me, that's not something that's panic worthy. It's noteworthy. Oh, interesting. Okay.
Yeah.
But it's not something that says, oh my gosh, man, the lifeboats, the ship's going down
Right.
by any stretch.
Did house prices fall?
We'll get into that.
Oh,
David.
okay.
Yeah,
sorry.
so-
Don't you worry, don't you
sorry.
worry.
And then Fraser Valley, so zooming out of the lower mainland, there are other areas, I'm told, around Vancouver. I've only heard about them. Fraser Valley experienced similar conditions, reporting the lowest sales volume since 2000.
Yeah.
There's a really interesting bigger trend that's going on here, and the title of this section is Investor Exodus. So there's a major slump that investors were previously, they were responsible for 15 to 20% of resale buyers and 50% of presale purchases. So we were talking about speculation. You're buying something that's not quite built yet.
And that's what I was getting at with the speculation part of real estate, right?
Yeah,
Yeah.
absolutely. They simply disappeared from the market. What's really, really interesting is I pulled a graph from the Fraser Institute. This is like a 10-year-old graph almost, 9 years old. And it just talks about the trend over the last 20 years of this flight of capital. So I'm not talking about people that need a place to hang their hat, the bank employee who goes home after a bad day and still has to pay their mortgage and have a place to sleep. I'm talking about people who have saved up a nest egg, and where are they putting that nest egg? And for years it was like, oh yeah, you buy maybe a condo or you buy a rental property. What's happening across Canada right now is we're seeing this crazy flight of capital. Canada's investment since 2013 abroad went up 73%. So what that means is if I have, let's say I have an extra, $10,000 lying around, rather than investing it in Canadian real estate, I would be choosing to invest in the American stock market. I
Right.
would be investing in other assets outside of Canada. And there's this massive exodus of not only population, so we've actually seen the Canadian population decline.
Decrease for the first time.
Yeah, since the Second World War. But we're also seeing all the money. So the Canadians that are staying, which is most of us, we're taking a look around and we're looking at other markets and saying, okay, I don't love the return on capital that I've been seeing over the last couple of years. And so we're going elsewhere. But this isn't new. Back in 2018, the then CEO of Scotiabank said Canada has a productivity issue and it has a competitiveness issue. That could have been said yesterday and it would still be true. Like that from almost 10 years ago still applies today.
Yeah.
And StatsCan is noting even in 2025, there is still this outgoing, the capital is just leaving Canada. So it's really funny to me. We had this real buy Canada thing with the tariff dispute that was going on. Everyone's freaking out about where your cheesies were manufactured. But then quietly, Canadians are voting with their wallet and they're actually investing outside of Canada.
Well, and we're all still, who boycotted Amazon?
Yeah.
Not us.
Yeah, that's right.
Who,
Yeah.
Who what happened to
Not my
Hudson? What
household.
happened to Hudson's Bay? It's gone.
Yeah, exactly.
That's a
Yeah.
Canadian company.
And another point too, I think most people that I know who invest in the stock market that do indexes and stuff, it's S&P 500.
That's right.
Yeah.
Nothing to do with Canada.
Yeah. They're not investing in
Maybe a little.
maybe a little bit. Yeah. But not less so in the TSX, right?
Yeah.
So
Shopify is a Canadian company. I'm wondering how
Yes,
that did.
that's true.
David, the
actually.
fact that you have to point out that one company that's doing really well, to me, that like highlights the trend. Like
we,
the
we
fact
got,
that
we got Lululemon.
yeah, there we go. We have like 5
yeah.
companies that are amazing. And,
Yeah.
you know, we're definitely punching under a weight of what we're capable of
we have
as
a
a
lot
country.
we have a lot of talent in
We have a
Canada.
lot of talent.
Yeah,
Yeah.
yeah.
So that's an interesting thing to just note. It's not related to 2025. It's not related to what's going on today. It's just a general trend that's happening across Canada. But to come back to what's going on right now with the real estate market, one of the reasons why I think why the presale market just is so miserable right now is a lot of investors lost their shirt when rates shot up a couple of years ago. So, you know, the first rule of investing is don't lose money. And we know that we generally try to avoid losing money at about 2 times what we'll pursue a gain. So
Yes, that's right. Losing hurts double as much
So-
as
Exactly.
gaining. Yeah.
Actually, bringing it back to the Canadian tech company Shopify, at the beginning of the year, it was priced at $216 per share, and now, as of today, it's at $153 per share. So Shopify lost 25% quietly.
yeah. That I didn't see that in the
That will
headline.
be included in
Yeah.
the
This tech bubble, yeah.
Yeah. So yeah, and then back to the pre-sale sort of collapse that's been going on. When this unstable interest rate environment first emerged a couple of years ago, when rates really shot up, a lot of investors, when you're buying a pre-sale, and a lot of people don't know this, they think, oh yeah, I saw that condo advertisement for a project that's going to be built in 2 years. Maybe I'll go after it. You don't get a rate hold.
No.
So if
Well,
you
sometimes you do, rarely.
it's rare.
Yeah,
and
yeah.
so you might say, oh, well, I could afford it at today's rates to buy an $800,000 condo. But in 3 years, if rates shoot up like they did, a lot of those people were forced to close and forced to buy on it, because the other big trend that's happened in the last few years is developers have gotten wise to this. They said, well, I don't want to be taking all the risk of pouring all this concrete and then knowing that people can just kind of flutter away. And so what they do is they restrict assignments. So it used to be that you could buy a contract to buy a condo that's going to finish in 4 years, and over the next 3.5 years, you could flip that off to someone else and you could sell that contract. Developers have stopped doing that. And so it means that not only are your feet held to the fire if the interest rate is unpredictable, you also don't have an escape.
Yeah.
There's no way to
And
sell
you can't borrow your way out of it because the value of the assets come down.
Exactly.
And you're not earning any income off of the asset either.
Yeah. So to me,
If it's- yeah.
the anecdote that I kind of thought of here is it's like cutting the strings of a parachute before flying into turbulence. So, you don't need the parachute yet, but the developers have cut all the strings on these parachutes. So even as an investor, if you do have to bail out of the plane, there's no parachute for you. And so it just makes it back to that first rule of investing, don't lose money. It just makes it really unattractive.
Yep.
And then on top of that, we've got the highest vacancy rate we've seen in 20 years. I promise the news will get better, guys. Just stay with me. We've got the highest vacancy rate we've seen in 20 years. We have rents that have actually come down. So the ROI for these investments is also starting to look a little, and so that, compounded with record high inventory and slower sales activity it's causing price stagnation. But there is a silver lining. So Vancouver versus Victoria. Well,
Here we go.
We're turning it around, guys.
go. Come on, Ben.
While
Bring us home,
Metro
baby.
Vancouver has struggled, and other parts of BC.
Yeah, like those stats from BC, like that.
Yeah.
What we kind of wanted to highlight here is that BC had this worst sales history in 26 years.
Yep.
And it was really what led the way to this worst sales is the Greater Vancouver area. They obviously are a huge market, so if they struggle a lot, it's going to bring down that average.
It's going to bring down all of BC.
Yes,
Yeah,
but-
because they're 3/4 of BC.
But when we look at, go ahead.
Victoria, here we go.
Yep.
Did prices crash? Not really. We've seen slower sales, definitely. Our sales are down. I think year over year, we're down. What did I put it here? 19%.
No.
Hang on.
That's January to January.
Yes.
Yes.
So that's important to me as well. I look at month over, year over year,
Yeah,
but
yeah.
based on month, because I want to know, okay, how is this January comparing to last January? And in that case, it's down 19%. But sales in January are usually pretty slow. So it was already like last year was only 400 and so, and this year was 339. Like
Yep.
it's not like nothing's happening. People are still buying and selling.
Yep.
But what's really interesting is the average sale price, depending on how we look at the stats. So before we started recording, we were looking at two different ways.
Do you want me to kind of go into?
Yeah, you talk about average sale price. I'll just quickly comment on HPI.
Yeah, please.
HPI shows we're only down 2.5% year over year,
Right.
with all the scariness, all the scary headlines. The average sale price based on the home price index is only down 2.5% for single family detached.
And 2.5%, that's like what an average person negotiates on a house when you buy it.
With
right?
Adrian Maclaren as your realtor, yeah.
Well, I aim for 5.
I think he gets better.
Yeah. But yeah, the contrast here is these scary headlines saying that 2025 was the worst year in real estate of this century. Da 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 da. And I thought this was interesting. So I dug a bit further into the stats, and I basically what I was able to figure out is that Victoria actually had a relatively normal year. Same with Vancouver Island as a whole. The interior, Kamloops, Okanagan, Kootenays, all of us. All were like steady, average, normal years. Northern BC actually outperformed.
Probably doing pretty good.
They did great. Yeah.
Yeah.
They actually had a good year. They had increase in sales, and prices are up there. So
Good.
yeah, Prince George, way to go. But then I looked at the stats. I wanted to compare 2024 to 2025 as a whole, because people were like, these are the headlines we're saying. 2025 was, as a whole, was the worst year in real estate of this century. So what I did, I took single family sales in 2024 were 3,028. Single family home sales in 2025, 3,156. We're up since 2024.
No kidding.
No kidding. And average price also slightly up per year over year. Yeah, and that's not year over year for January.
Right. Okay.
So
year over year.
It's a little bit confusing, but year over year for the whole year of 2024 versus 2025, we're up from 1.292 to 1.324. Now, townhouse sales actually exactly even, 824 2024 and 824 sales in 2025.
No way, exactly the same?
the same.
Wow.
Yeah, which is kind of crazy. And price was basically around even, right around 830 a piece each there. Condo sales was the only market which exactly mirrors where we're kind of at in this market. Condo sales for 2024 were 2171 with an average price of just under 600,000, and condo sales of 2025 were 2107. So about, what is that, 70 less sales? But what is that?
Come on.
What is that?
So it's negligible.
Negligible, right? And what's funny is the average price of 2025 was actually $10,000 higher than 2024 as a whole. Which doesn't compute to me, right?
No.
So the headlines, so it's not really as bad as what the headlines or the statistics are trying to say.
The headline was talking about the Greater Vancouver area and any major market, Toronto, Vancouver, just bigger cities. Like when you have that amount of supply, and then when the market slows down, you're gonna get hit harder.
Yeah, harder.
Right? Like
yeah.
the condo market, when it goes up 10%, that's not 100 listings. That might be like 2,000 listings.
Right.
You know what I
Yeah.
mean? And so I think they get hit a little bit harder in terms of when these types of things happen. And the other part about Victoria, I think with all of these things that have happened, like, we talked about like the recession or a down market, all this stuff. Victoria's job market is government.
It's very stable.
It's stable, right?
Very stable.
And
Well, did you hear about
healthcare
the austerity measures? The province is like slashing all kinds of admin and bureaucracy. So maybe it's not as stable, but
Yeah, okay.
it's pretty good.
Yeah. And then the other part is Victoria. We're landlocked, and we're probably the most desirable place to live in all of Canada.
Yeah,
So
and there's
it-
tons
like
of
to
money
think so.
already here.
So
Yeah,
so
that's a
anyway,
good
like
point.
basically what I'm getting at is when we're seeing these headlines and these worst things, and then I dig into the actual stats and I'm seeing, well, actually 2025 was a better year than 2024 for Victoria specifically.
Yeah.
So anyway, that was an interesting thing that I wanted to point out.
I'm just gonna jump in and kind of say that it's I think it's cute to talk about these statistics, but we have to always remember, and for our listeners, like what you said before we started, we have to kind of like try to explain what these statistics might mean to the regular listener.
Yeah.
And what I constantly try to explain to everybody is you don't contribute to the statistic if you don't make a transaction.
Yep.
And those statistics are really affected by some people who do have to sell in a very stressful situation and take a huge loss.
Yeah, that's a great point.
So while most people are probably not going to be taking big losses on properties or, big drops in their value when they're selling, there's going to be a few that are going to affect those statistics.
Yep.
So for the regular person who's thinking, should I buy real estate or should I not? You have to find your own deal. You have to find your deal. You have to go out and find your deal that's going to be lower than what you think something is worth.
Find your $1 sailboat. It's
Find your $1 sailboat. Find your $1 sailboat.
Maybe, or you can do that challenge where you trade up from a paperclip and maybe you can get a condo downtown.
Yeah, right. Yeah.
Vince, is there anything else you kind of want to touch on?
That's kind of it. Just don't believe everything you think. Like the headlines are, it rarely ends up being as bad as they say it is.
And then funny that you say that is like, because I was reading that headline and I was like, 2025 was a horrible year for real estate. And I was like reading all this stuff and it was just, it didn't feel like I kind of bought in until I actually, I guess what was until I actually did the research myself and dug in and figured out that actually this headline doesn't apply to Victoria. I actually bought into the headline myself. And, it took some time for me to do the research, but when I did, there you go.
There you go. It's not that bad. Real estate is actually a really, really good asset.
Well, but it depends,
like you said, if it's speculative, but going out and buying a piece of land,
I think you got to be smart.
Speculative.
You got to be smart about what you buy,
right?
For sure. Right now, at least,
But plain land is speculative because there's no income that can be generated off of it, and you can't live there.
That is
whereas a house, you can rent it out or live there.
Yep.
And it's also the only thing, if you have a big win, it's about the only tax-free thing that you can do as a private citizen is sell your single-family home and have a tax-free sale.
Before we kind of end the podcast here, I quickly want to get into my 2026
where are we going with all this?
Market predictions. Pull up my crystal ball.
Yeah.
You guys can chime in as you want. It's really boring. It's pretty similar to last year's predictions, but I think we're in that late stage correction plateau. A flat market. The market appears to be kind of in the final stretch of the correction. I would say like for single family, I'm talking for single family right now. I would say we're probably about 1 to 2.5 years out from like a full recovery of the plateau of our correction. Obviously, the short-term risks. We talked about employment. We talked about provincial hiring freezes. Potential layoffs. All that stuff is definitely all things that can extend this correction or shorten it, depending on if it doesn't happen. But my main thing is single family homes they've had a couple surges over the last I would say 2 years where it's there's been 1 or 2 months of in the spring of last year or even January last year where I saw single family have a short burst of a seller's market, we're seeing more multiple offers.
People always want a house.
Yeah. But I was seeing, but then it would lull off again. For example, I feel November, December of 2025, it really lulled out. And then second week of January kind of picked back up. These little kind of pockets of activity, turning it a bit more into a seller's market for single family specifically. And in my mind, all it's going to take is one of these surges in the next 1 to 2 years is just not going to stop surging. And that's going to be we're seeing these little upticks and then comes back down and upticks and comes back down. And then all of a sudden, one of those surges, it's just not going to come back down. It's going to...
Is it going to the moon?
Well, what was the thing that you always said? You said...
average price will be $2 million.
No, 2 million. I thought it was 1.5.
1.5. Around
1.5. Come on,
it's getting up there.
1.5. What in the next 5 years?
10. We'll say 10.
But if we follow the news, okay. First of all, I wanted to say boring is a good investment generally.
True. Yes.
Okay, boring is a good investment. Yeah. That's what people should have. But if I'm right and there's a tech bubble.
Yep.
And the tech bubble bursts. So if there is some kind of reckoning on the stock market, what's Tiff going to do? He, at that point in time, is going to have
rates.
An emergency rate cut.
That sounds nice.
We saw emergency rate cuts during COVID.
Yeah.
We saw emergency rate cut in 2008. We saw emergency rate cut Enron.
Oh God.
So what's going to happen to real estate once we have the emergency rate cut?
Yeah.
it's gonna pick
have-
up steam again.
Oh my gosh! So all of your doom and gloom is actually really positive for the people
For
that
the
are
real
thinking
estate
of
market.
buying.
Yeah.
Oh my God.
Or the
in-
people that are renewing their mortgage because they're going to be able to renew in hopefully a lower interest rate.
Right.
And have
Guys,
more money in their pocket.
I'm amped. This episode has been an emotional roller
It has
coaster.
been a roller
I'm
coaster.
I'm like sad. I'm happy. It's going everywhere. And you know, a lot of this is speculative.
Yeah,
Right?
sure.
Like,
I could be
big word of
totally
the podcast,
I
word of
could
the
be
podcast.
totally wrong.
Yeah, and we don't know. But these are my predictions. Don't hold me to them. But yeah, single family, in the next 1 to 2.5 years, that's when we're gonna have that full recovery, and we're gonna hit that slope. It's gonna start going back up. Condos are gonna lag behind.
That's usually how it goes.
That's usually how it goes. Like as soon as we see that single family come up, you'll have a period of time, probably another year.
I think it'll be longer because of all the purpose built construction.
True.
So rentals. So the rental buildings.
So
that are
you'll
coming
probably have like a 1 to 3 year period once you see single
Yeah.
family start to hike up, where that'll be maybe a great time to grab a condo.
Yeah, there's going to be
Right?
bumps. There's going to be bumps across the market
Yeah.
because if more people are buying single family home, like I think single family homes increase in value by that much more than condos. But I think once interest rates come down, the housing crisis still exists. I think the condos will more fill up. Hopefully fill up, and
But
prices won't go up by as fast.
No. But my main point there is I think it'll lag. Like I think the condo market will continue to be quite soft and flat for longer than the single family market. So basically, overall, what I'm getting at here, I have no bold predictions for 2026. I think we're going to have another relatively flat year with less than 4% change in any sort of pricing.
Yeah, I think you're right.
And I mean, it's kind of nice, like if you're a buyer,
Yeah.
you don't have to feel super stressed. If you're looking for a home, you can feel good that like maybe I don't have to deal with multiple offers, and I can put conditions on a home, and I can negotiate a little bit with the price, right?
It's a balanced market.
And then for sellers, like I don't think it's horrible either. Maybe you have to set a little bit more realistic expectations in terms of how long is it going to take to sell my house, and am I going to get that price that I've had in my head for the during COVID times? Maybe not, but at the same time, it's not unrealistic. Like we're not in a complete buyer's market. You're going to find a seller for your property as long as it's priced fairly. So it's actually quite a nice time to work in real estate and to be a buyer or seller.
Yeah, we just have to be more. We just have to be more smart. We have to work better.
Yes.
We have to keep
that's-
getting more efficient.
That's a good point. Yeah. You have to work a bit harder right now, for sure. That's all I got.
Let's wrap it. That was great.
Okay, perfect. Well, David.
Yeah,
If I
thanks,
do
guys.
so myself.
Any final tidbits of love or information?
We went through a lot. Thanks for having me.
We did. All right. Thank you guys for listening to the Victoria Real Estate Podcast produced by the CityNest team. We have had some fantastic reviews and we love them. So please leave us a review on Spotify, Apple Music, or wherever you're listening. We also really appreciate you guys sharing the podcast with friends and family. Otherwise, Vince, how do people get in touch?
Oh yeah, just send me an email, vincent@citynest.ca.
David?
I think people should really try to read my blog. So go to olympicmortgages.ca.
Subscribe.
Yeah,
Absolutely.
subscribe to the blog.
Newsletter for sure.
Just go to news and resources.
It's the
in
best
Olympic
newsletter.
Thank you.
It's the best real estate newsletter.
Yeah.
Better than ours.
Oh, absolutely.
Thank you guys.
It's the best.
I try.
Yeah. It's
Yeah.
entertaining.
Thank you.
You get all that funny high level stuff with
This
that
week,
David
actually,
does.
there's a picture of Homer Simpson on fire.
Yeah. And there'll be a couple swear
saw
words
it.
in there.
Yeah.
Like he keeps it fun.
Yeah.
He keeps it fun. All right, guys. You can reach out to me, Adrian, at 250-464-4122 or on Instagram at Adrian Real Estate Victoria. Thanks, guys.
Thank you.
Oh, that's wrong. The wrong one.
There we go.
Bye-bye.
All right.